Hi guys, welcome to Crypto Waffle episode 10. As you can see, we have a new setup. We are streaming via Riverside. Hopefully you can see us both on a much better layout, and we can also share screens with a much better layout as well, rather than having to turn phones around and all that stuff. But today, main topics or areas of topic, Bitcoin ETF. Also want to talk about gold as well. Bit of a boomer thing to talk about, but I think it's necessary to talk about in these times. AI agents still, because I don't think they're going anywhere. And then a recap on what's happening in the macro world. So where do you want to kick off today, Carl?
Can we give ourselves a pat on the back for reaching 10 episodes? Now we're here, couple figures. So feeling pretty good about that. The markets are doing terribly, so let's get started with ETFs, because apparently we've had some pretty big outflows. I'm going to assume today was another big outflow day.
Yeah, ETF outflows have been pretty bad over the last, week? I mean, we've had some decent inflows, but they just seem to be getting hammered. The main reason why I wanted to discuss the ETF stuff was because I can't find the post on my phone now, but I believe the Bitcoin ETFs have now surpassed the gold ETF holdings in 1 year in what gold did in 10.
Oh, really? What, have we had Bitcoin ETFs for 1 year now? We haven't even had a full year. Coming up to a year. Like March time, wasn't it? At the end of Jan.
In sub a year, we've managed to do, I mean, I've got some screenshots here.
Is that inflation adjusted, or is that simply because nowadays everything the dollar is worth a tenth of what it was worth 10 years ago?
I don't know if that's inflation adjusted. I mean, I was looking at a report on Cointelegraph.
Yes, because that can always kind of make things, because in that case, like I've earned more money this year than my great granddad earning his whole life. But that's not the whole. I've got such a great job, it's because money's not really worth that much anymore.
No.
It'll be interesting to know if it was inflation adjusted or not.
Yeah, I mean, I'll share my screen quickly just so we can see. So as you can see, this is a article via Cointelegraph, and they basically go through the spot Bitcoin ETF and what a resounding triumph it's been so far. The key charts. So this is all the ETFs on Bloomberg, and you can see Bitcoin, or the IBIT ETF, which I believe is the BlackRock, is in the top 3, topping the QQQ and S&P ETFs for year-to-date flow, which is just crazy. As far as I'm concerned, that is, you never would have, I don't think anyone could have predicted that when they came out. And then it's also, as that headline there says, Bitcoin ETFs have flipped gold. So Bitcoin is often called digital gold for its value, blah, blah, blah. By November 2024, BlackRock's IBIT had amassed 33.2 billion in assets, surpassing the firm's gold fund, iShares Gold Trust, which stood at 32 billion. Again, if you had told Peter Schiff that, I'm sure he would have called you an idiot, and you would have won some serious money if you had a bet with him, because I'm pretty sure you put a large amount of money on the line saying that wouldn't have happened. But it has.
That's crazy. And it does look like it's compared to what they've got under management for gold, and they've had the gold ETF for 10 years.
Yeah.
And we've already caught them.
Yeah. I mean, I don't think this will slow down either. As we know, we are in some sort of exponential trend, and I believe this stuff will continue going forwards. The other thing I did want to share, obviously, a topic of gold.
Yes.
Would like to show you the gold chart. So we're going to cover a little bit of macro as well. We can probably go into the macro from here. But at the moment, I quite like the look of gold. As we discussed last week, we talked about the dollar potentially topping or being near a top. Now, the dollar and the gold, I would say, are more closely correlated than the likes of Bitcoin and the dollar, to say. So we have a DXY that is near topping. So this is the DXY, just to show you here. The potential, I've already pre-drawn it because I think that will be the case. But potential head and shoulders top happening. We also have what they call a 3 drive to a top pattern. So this was drive 1, reset, drive 2, reset, and drive 3. Normally that third drive is the top, hence why it's called a 3 drive to a top. And if we get that dollar fall down, this beautiful gold pendant that has formed should see a spectacular rally. So how can we play this within crypto world? There is this beautiful thing, Tether Gold, XAUT. So this is basically like trading gold, but via a crypto. So not financial advice, but because crypto is having this liquidity drawdown at the minute that we've seen and we've discussed and we've been following for probably the last 4 episodes now, if not a little bit more, I have been, some of the profits that I've pulled from my crypto assets, I have been buying this up. So as you can see, it's this very similar chart to the one I just showed you, which was actual gold, because it tracks it. And if we get this dollar turn in the shorter term, I'm looking to get maybe a 5-10% out of this and then come out of that and back into crypto. So that's kind of what I'm looking at, what I'm playing. Have you seen this before, Carl?
We used to have the gold Bitcoin. We used to see as like a leveraged gold play. So
Yeah.
If gold was going to go up, you'd expect Bitcoin to go up by a larger amount. I guess if in this scenario, I'm assuming Bitcoin goes down if we lose liquidity and gold goes up, which
I think this is the fine line we're sort of playing. So if we're to go, if I'm to load up a Bitcoin chart here, and then we throw that liquidity thing up that we've looked at. So here you can see we've kind of been still lockstep with it.
Yeah.
We had this brief, we talked about this last week. We thought we could be decoupling from it. Since then have been rejected. I mean, we've had a nice bounce today. You can't say that is not a nice bounce from the lower end of this Bollinger Band on the daily. And we tapped, what was that? At the low, 89,397. So since then, we've had a decent bounce. We've got about a 4K bounce. 3K bounce. But if, keyword being if this chart is to follow suit, we should still see a drawdown. Now, obviously, a weaker dollar then becomes a tailwind for crypto and that, which I think will be good. But ultimately, I think it will be slightly better in the shorter time frame window between gold rally, Bitcoin rally. I think we could start to see gold rally a bit without Bitcoin, if you know what I mean. So we did do that, I believe, at the start of this year.
Can you overlay gold on this?
Yes. So let me get rid of that liquidity. I think I might need to put it on the same percentage scale. I don't know, actually.
I guess that what it does show is that gold is a lot less volatile.
Yes. So gold, everyone do same percent. Yeah, so gold, obviously, you're comparing an asset that is, I don't know, 10 times more volatile.
Yes,
not more than that. Where we go.
Yeah.
But this isn't really working.
So what you're saying, that the immediate things that spring to mind is...
Right, here we go. So sorry, managed to get the overlay. When we were in the summer, we had this drawdown in Bitcoin. you can see gold actually rallied.
There's the decoupling, which is rare.
So I think we could be in a small, because you can obviously see as I zoom out here, we're not too far off each other. Yeah.
But it seems like there are those instances where there's a decoupling and it seems to be pretty violent.
That's what I think we're about to have. This small period where gold will start to rally again whilst Bitcoin either chops or goes down. Which is why I'm looking to play a bit of this crypto gold way of doing things for the shorter term. Obviously, when I say shorter term, I don't normally do a lot of this stuff, but I'm just fiddling around because it's fun in buoyant times. But I think we could go in a period now where gold has that kind of short-term breakout. We may see not a decouple to this magnitude like we saw here, but I believe we could see a decoupling of sorts, which is why I believe we could, if I go back to that gold chart, see that wedge break. So let me get rid of that. That's why I think we could see that wedge break, and ultimately I think we could see gold a hell of a lot higher than where it has been. I mean, if you were to tell people that gold is going to go to $3,000 by the end of 2025, mid-2026, they'd probably think you're nuts. But as we've showed you also before, I have this absolute mountain of debt to be dealing with, and there's only one way to deal with that, and that is for Jerome Powell and everyone to get the money printers going.
Money printers go burr.
Yeah, and what happens when those money printers go burr?
That's it.
Right, exactly. Simple. Gold should go up, and the lower you go down the risk curve, the more returns you get, which is why we all hang around in crypto land, because it's still seen as the small asset classes as such.
Right. So what I was going to say was the risks on the risk side of holding stable coins. Now with Tether, which they have USDT, and I didn't know they had this gold Tether product, but the FUD has always been that no one's managed to successfully audit Tether to prove that they own what they say they own. Do they have the supplies of actual gold or even paper gold that they're using to back this crypto gold that they're issuing? That would be where I would say the risk is. So yeah. I would say the issue being really, how long are you going to sit in that asset for? So
not long. I'm looking to do
a couple of weeks, really.
3 to 10%, get out. Yeah, I'm not looking to hang around in there. And we know when we'll go into the charts in a minute when we do some more of the macro stuff, but when the dollar is so strong, it can cause stuff to break. Like we could see, like a bit like a Silicon Valley Bank collapse, we could see something collapse. I mean, the talk of the town at the moment is that the US are using a strong dollar for them to bargain tariffs with the likes of China, EU, Canada, all these countries. So Trump can then come in, he's got a bargaining chip saying, look, we will lower the dollar if you agree to this, this and this. Yeah. Yeah. Well, I guess I like a carrot and a stick sort of thing. You're dangling a carrot in front of them and poking them with a stick, going, look, you do this, we'll lower it, and happy days.
I think the long-held belief has been that the US, years and years ago, they had a choice between having a strong dollar or having a strong manufacturing sector. You generally can't have both. You'd want a weak currency if you want strong manufacturing, because obviously your exports will cost more if your dollar is strong. Yeah. So now that they do have the weak manufacturing and they can't get that back anytime soon, I guess they kind of have to lean into the strong dollar. But
I mean, especially if Trump wants to get all this manufacturing back in the US again, you can't be doing that with a dollar that's sitting at 110.
I think if we're honest, I don't think it happens. I don't think they get all this.
It'll be robots. It's not going to be people.
Yeah, I don't think they get it back. And I think he knows it. I think sometimes he says stuff for the sake of saying it. He's like, I think he's a bit of a showman. So I don't know. That's what worries me about the US and the strong dollar at the moment is that I can't see a genuine reason for them to want to weaken their own dollar. I don't think they've got a plan B to fall back on. But
I mean, that's what we're waiting for. So in crypto land and basically in the stock market as well, a strong dollar is not great at the moment. No, I need the dollar to come back down. Now, one of the guys that has nailed this dollar is TradeGate Hub, Dale Pinkett.
okay,
He is a trader with, I'd say, 60 plus years experience, 50 plus years experience. And he nailed this basically when the dollar was down at around, I'll share my screen again here just so everyone can see. So when the dollar was down here, if we stick this onto a weekly rather than a daily, when the dollar was down here and everyone's going, oh, the dollar's going to break, dollar's weak, blah, blah, blah. He went over going for a run to 110-ish. Yeah. Everyone thought he was nuts. And I was like, well, really? We're at the bottom of a big bear flag effectively. Is it really going to go for a run? And lo and behold, what's it done?
Gone for a run.
But he's now bearish on the dollar. He is probably one of the most bearish, I believe he said. He has been in a very long time. He's now got targets of the dollar coming down to around 92, which is a massive drop. And I've said this, if you guys are in my free Telegram, I post in there a whatchamacallit, like a market update every month. I reckon if it's not the monthly chart, it'll be the quarterly. I know that's me moving the goalpost a bit, but I think you'll see a fake out. So I think this monthly candle because obviously the month of December here shows a breakout of this range that we've been in effectively. I reckon this monthly candle could be a big reversal. And if that is a big reversal, that's then classed as a fake out. And you normally see an extended move in the opposite direction. So you should see then the dollar cascade forward, downwards, effectively. And I think on that next move down, we do break that par, that $100 level. I think we go below. There is a longer standing trend channel. You can kind of see there. That line's kind of gone a bit ski whiff, but that comes in at around 96. So that's a target of mine, is to come and touch this trend line. Obviously, like I say, Dale had targets of 92, stuff like that.
What's the time frame that this trader is saying that he's feeling bearish and he's
2025?
Okay,
should see
12 months.
This top soon. And also, so nice segue into the macro stuff. Can you see these charts here?
Which ones? No, I can only see the DXY still.
It's a share different screen. So you can see this here. So kicking it off with the one that we've all been watching, liquidity, global M2, Bitcoin. That is it there. That's what I showed you briefly a minute ago. We're still kind of following. Okay. Like I said, we discussed this being maybe a decoupling. Since then, we've reversed, and it looks like we may continue for a bit. This is showing us that we should see, I mean, the one on my computer said 50s, I think high 50s, low 60s. This one's kind of saying 70K, worst case at the minute. I don't think we go that low, but who am I to say that? I could be wrong. Now, this is a key chart. So this is the dollar going into 2016 when Trump last became president.
Okay.
The white line is then. The turquoise blue looking one is now.
Yeah.
That has been lockstep. Okay. Now, if obviously this is just, pause this if you can, read the text, because this is not stuff you get for free. I shouldn't be doing it, but who cares? If we see this again, we should see a dollar come back down again. I mean, I've just talked to targets of 96, and if it does repeat this, you can see it's not a million ways from 96. That'd be probably about 97 if we followed it down to here. So that timing would line up really well. And the other chart I wanted to show you was on page 26. So I'll quickly just skip through all of these. Oh, this one here. The one that everyone wants to watch, Global M2. So 2016-17 bull run. We saw this wedge pattern. We saw liquidity break. We saw a retest and continuations. Bull run of going into 2020. We saw a 2-year pattern to form this wedge. We saw a break going into 2020, a retest, COVID, massive expansion.
Yeah.
What's happened now? We've had a wedge fall between early 2022 to late or mid 2024 before we broke. We've since seen a retest. What happens now? Now, it is 100% hit rate since 2016 or 2016 this has happened. So I am not one to fade this. And as there's a saying that we all say, normally the trend is your friend until it's broken in the crypto space. And that to me is a bigger trend on a bigger time scale.
Yeah.
So I am looking for that to continue. And I'm not bearish looking further out. I know there's a lot of people and TradFi people calling for the bond market is signaling this, that, and the other. Like the world's going to fall apart. The S&P is going to do a 30% drop. We can do all of that, and it still doesn't really matter, if that makes sense. Because if anything blows up, what is the answer to that? Print money. Exactly. So I'm not sure. That's what I kind of find hard that these higher level people don't. I'm not sure if I think they understand it. I don't know if they're just. Is it because they have been on the wrong side of the trade for so long?
Sometimes and sometimes it's just time frame, or you might get lost when you can't see the wood for the trees because you're so involved in what your own view of the world. So I get this. I used to beat the drum that the system's going to fall apart like in 2000 and I think, and I first started to figure out how money works. I was like, well, this ain't sustainable. This can't continue to go, but it does, because whenever things get a bit dicey, you print more money. That's all. You just move the euros along. So, and if they do print money, then obviously the people who are hedging, holding gold or holding Bitcoin are going to be the ones that are.
I mean, I know we're seeing in the UK now, we're seeing the bond market explode. I mean, do you remember when Liz Truss came, that thing back in October in the Bank of England had to step in?
I listened to a podcast with her today, oddly enough, after seeing somebody tweet something like Liz Truss got sacked for less or something like that. And I listened to a podcast with her today, and I remember when she had made some few changes and the bond
market shut the bed.
Yeah, and then
we're now higher than when that was. So we're probably going to have to see a Bank of England intervention again at some point. What will they do? They'll do what they did last time. I think they printed, was it 700 million or something? 700 billion?
Yeah. They're going to...
7 billion.
What else can they do?
Right. They blow up.
They literally have no other tools. It's the only tool they have. The only tool they have
is
rent. Yeah.
They're not going to let the pensions go.
No. They're already... Well, I guess they've said to the old people they can freeze. I guess that's one thing, but...
Well, yeah.
To take away their pensions might be a different...
Another. Yeah, it's a weird one, but we're seeing this thing at the minute. Obviously, bonds are higher, interest rates are high everywhere, because you've got everyone cutting, but interest rates just seem to be going higher. Which, like, I was just discussing this with my dad earlier, and he was going, yeah, but they're cutting, so why are they going higher? I was like, well, it's basically the bond market standing up to, Bank of England or the Fed or whoever saying, you've done wrong, sort of thing.
Yeah.
It doesn't matter what they do, but he's like, yeah, but surely they're just going to blow it up. I was like, but what happens if they blow it up?
Can't blow it up.
Money. Well, if they blew it up, what do they do to fix it? Build a hole in the load of liquidity again? I mean, you've kind of eliminated that risk. Because if you do break, say, oh, JP Morgan failed. Oh, don't worry, we're printing some liquidity.
And in a way, it kind of removes, for me anyway, it removes all of the fear from the market, and there's all of the fear. We know that it's too big to fail. If they do mess it up too bad,
I'm sure at some point there will be something where it will have a drastic effect. But I mean, I'm on the side of the fence where there's a lot of people out there that think obviously it's going to blow up, it's going to explode and cause World War III, the depressive sort of thing. But I'm of the opinion that we actually kind of grow ourselves out of this with the rise of AI, robo-taxis. Like, the only way we can pay our debts off is to have GDP a hell of a lot higher than it is now. And we're not going to get that with people. And everyone probably knows this in their day-to-day lives. The majority of people are damn lazy.
And even if they're not lazy, with AI, you could do 10 times as much.
Yeah. I mean, Amazon hires more robots than people at the minute.
And I've been using AI a lot, and I'm getting loads done. Because you can just get much more done when you don't have to, like, I've done documentation, I've done Gitbook, and it was maybe, I don't know, 20, 30 pages, and I've knocked it out in an hour and a bit.
Because in the upward world, how long will that have taken?
It's taken me days. Yeah, because it's literally taken me days. But I've not had to consider the writing. I've just had to, I guess, mark the work. So I'm just kind of curating what the AI has done. Okay, that's not quite right. That is right. Maybe that might sound a bit better. And that's it. And then I'm just doing that page. So I think with that jump in productivity, I think it's possible that we grow ourselves out of it. But that blue line on that chart that you just showed, that's a steep climb. was a steep.
I mean, Raoul has come out. I watched a podcast that he featured in, I want to say a couple of days ago now. He said something along the lines of a golden bull market sort of thing, that we are potentially in the rise of the golden bull market, because he reckons that you've got until 2030-ish, 2032 to make as much money as possible before something big happens. Because I think what they've figured I believe they figured out is that they can only obviously do this refinancing the money thing for so long before something happens. And we're kind of in this fourth turning stage where it's kind of the rise of another superpower as such. If that makes sense.
Yeah.
I don't know who it will be yet. Obviously, we're way off of that.
I think we've got a bit more than previous. I think we've got a bit more of an interconnected world. I think America and China like to act like they're at war, but they're not really, because China needs America to buy all of their plastic toys, and America needs China to build all of their plastic toys. And America hates Russia, but China needs Russia for the energy to build all of the plastic toys. Everybody's kind of acting like they hate each other and having these proxy wars, but in reality, nobody can let nobody fail. So China aren't really thinking, right, we want America to fail, so then we'll sell all of our plastic toys to Nigeria, because it's not going to work.
Before I come into the investing world sort of thing, right, you never really think of all this stuff. You hear the odd news headline and you're like, well, Russia hates us, it hates Europe, China hates us, everyone hates China and Russia, blah, blah, blah.
Yeah.
You come into this world and you very quickly realize you're like, crap, everyone relies on everyone and no one can function without each other.
Yeah.
So when you hear of people going, oh, they're going to use nukes, and I'm like, I'm not even thinking about that. Because in what frame mind are they going to pull a nuke?
Yeah.
They're just not.
It makes no sense. Because even in the scenario that America didn't have nukes, imagine America had no nuclear weapons and Russia did. Still wouldn't use them, because then they're taking out the people who are going to buy the crap, who are the people who
stick out all the infrastructure.
Yeah, and they're taking out their own customers. It doesn't make sense. I mean, everything's quite interconnected. So it would take some very, very stupid people to make something like that happen. And I don't think we have people who are that stupid. So
no. I think everyone's a lot smarter than they
Yeah. Then we give them credit for.
across.
Yeah, then we give them credit for. But at the same time, maths is still maths. And the system that we have, which we can't just change, is a system whereby you have to keep on kind of tricking people into thinking that these bigger numbers matter when they don't, unless you've got a Bitcoin or something else which you can hedge against these bigger numbers. Because otherwise, that the chart that you showed with the steep blue line, if you zoom in,
back up quickly.
Yeah, if you zoom into other years, you'll have steep blue lines like that. But once you zoom out, the steep blue line don't look as steep. Everything looks tiny when you zoom out. So if you go over to between 2007 and 2011, there's another steep blue line there.
Let's go into this here. Oh, well, hold on. I think I've just ruined it.
You've killed the
There's 3 different times. There's 3 different. I won't zoom in as won't do what that I did then. But.
Yeah, so back to between 2007 and 2011, there's a steep blue line. So it's one. Yeah, when we was there and we saw that steep blue line, we was like, bloody hell, we've gone all the way up to 450 billion. This is crazy. Ooh. And it was like, how's the world going to function? Now, here we are 10 years later. We're way past that because it's just a number. It makes no difference. The assets will exist regardless of what number you attach to them. So the idea is get hold of the assets, the actual assets, gold, Bitcoin, arguably property, but they have their own issues, and you hold the assets and then they have to assign a number to it, which is they call the value, and that number will go up. That's the game.
I mean, this is another thing why I don't dislike gold, because for a lot of people closer to my father's age, the probably these, that's all they've ever known. Like, this for them is, well, what the hell are you doing? This is dangerous. It can blow up at any minute.
Yeah. It's got then closer to my age. That's closer to my age. Like the people slightly older than me, internet money, like people of my age and just above, so fees and up, internet money sounds stupid. Like the concepts that they grew up with, like the questions that they ask, which is a question that we would hear a lot, is, well, what's it backed by? Like, what is it? Like, as if that ever mattered. But to them, it matters because they remember putting coal on their fires. Like they remember touching things.
So, do you know, you see those little videos, like you might see them like that. What is the dollar backed by? And then it goes into like aircraft carriers, army, tanks, and you're like,
yeah, it's language. And the thing is, I think with the younger generations, they're beginning to realize that something is backed by what we say it's backed by, which in a kind of roundabout way is what meme coins are all about. Like, it is because we agree that it is. That's language. Do you know what I mean? Like, that's...
I also think that like for me, right, so I only came down this investing route because I very quickly worked out, I've always kind of been like not numbers guy, but maths was my stronger thing in school. I come out of school with 0 A's, 0 B's, just straight to a C's in English, maths, science. Right? I come out of school thinking that, yeah, the traditional thing of, I'll buy a house, you know, all that waffle. Right? And you then have that Help to Buy is a thing that they have in the UK. Oh, you can save £4,000 a year and the government will give you £1,000, blah, 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 and you can do that.
You know, that would really help to sell, right?
Yes.
They call it help to buy, but really, it's help to sell. Because if you don't buy, they don't sell.
Exactly. But I had one of them, and I was like, I'd been doing it from the age of 18 to 24, and I was like, this is not even enough of a deposit. Like, I can't even get anything of this. I was like, because I tried applying for stuff, and I was talking to mortgage brokers, and they're like, oh yeah, you'd have a 35-year mortgage. And I'm like, 35 years? Are you joking me? I was like, I haven't signed up for this. And then you can't go down the renting path because you very quickly will run out of capital, and then you're stuck. Like, there's nothing you can do.
Yeah.
So I'm like, well, the only way to do it is, and this sounds bad, but it's not gambling, but it's like, okay, I've got this asset class that's done historically since 2009. What is it, 150 odd % a year? Okay. I have to gamble. It's the only way I see me ever buying a house. And I think for a lot of I'm 25 now, and I think for a lot of people my age, unless they have a successful business or a high-paying corporate job, you are never owning a house. Like, it will be very difficult. And people getting a house will then not feel trapped as such, but there's a lot of pressure on you. Like, to have a mortgage for 30 plus years, it's a lot of pressure.
I think the beauty of it is that when you do get enough money, let's say end of this cycle, you have a wonderful cycle, everything pans out perfectly the way you want it. Every Monday we're making picks. February, March, April, May, bosh, knocking in the numbers. Comes the end of it, and you've got this big stack of money. You're going to look at it and you're going to think to yourself, should I go and whack 100 or 200 grand down on the deposit for a house? Should I sit on that 100 or 200 grand, wait for the next cycle and turn that 100 or 200 grand and go and do 5 or 10x?
Yeah.
Now, for you to not rent a house after you've asked yourself that question is going to be almost impossible, because there's no way you're going to sink your money into this house that you've wanted to die for at the beginning. And you're going to realize, wait, so owning this house it's not that great, because I'd rather have the money if I can use the money. And the issue we have is most people can't use the money. Most people have money.
That's the issue, is financial education. That is the biggest hurdle for everyone. Everyone not being educated on how to use their finances.
Which starts from laziness. Like I was having a conversation with a friend of mine yesterday. Now, he should be watching this today, but I bet you he's not. And he'll say to me, just tell me what to buy. And I'll say, look, it doesn't really work that way, mate. I can tell you this, but you're better off watching for a couple of hours, listening, and then making up your own mind. Starting to understand, starting to figure out what's going on, so you've got a better idea of how to maneuver with your own money. And he's like, yeah, but I don't want to do that. But he'll watch Man United Arsenal for 2 hours. He'll happily sit through Love Island for an hour, 5 days a week. And you're like, well, yeah, then you get what you deserve, I guess. So,
yeah, people will call you names and they say, oh, you got lucky. And you're like, well, I got lucky because I witnessed my portfolio draw down 80%. I got lucky because I put 70% of all my spare capital in and didn't go on holiday and didn't go out for a year. Like, is that luck? No, you grafted for it, and it's not an easy ride. Like, most people would come in, they put $100 in, see it go to 50 and they're out.
yeah.
Gotta hang around. But listen to them doing that with a house deposit.
Yeah.
They're putting 20 grand in, it draws down 5k, they're done.
Yeah. Like we were saying before we came on air that I had an entry into AI 16Z.
Yeah.
I thought it was a beautiful entry, $2.
So I chart up for reference.
Oh, please do. Because your average crypto influencer will not show the L. But look at this monstrous L.
There you go. So that is around about your entry.
Yeah. And it's down 50%. However, and this is the interesting part, AI 16Z is still my most exciting asset. It's still the thing out of everything in crypto right now that I'm the most excited about. Even during this 50% drawdown. So it's drawing down 50%. I'm going to throw some more capital at it as soon as I've drawn up the courage, and then hopefully we'll see it push on as the bull market arrives.
Yeah, because I was also saying to Carl before we come on, CryptoSI before we come on, that I've started nibbling here. Because you will see a lot of these AI agent plays. Like, you go to the ones, even the big ones like Virtuals.
Virtuals is at 250.
Yeah.
It's down
Virtuals is down big. Like, yeah, 54%.
These things are on sale now. These things are now easy money.
Yeah. AXBT, down massive.
Easy money.
I mean, game, oh my God.
Easy money.
Look at that. I mean, that is down current price 63%.
Easy money.
And look where it hit, the area of interest. Literally, you can learn this stuff, basic technical analysis on YouTube for free. And then you can go, right, there's some area of support. That's where I'll buy.
Where I'll buy, yeah.
And we've had you can also see that this pattern on my screen now, this like megaphone pattern, we've broke to the downside. So you know the trend is going to be to the downside for a while. Like, these patterns tell you this. Can you see the dollar now?
Yeah, you see the dollar.
If I show you Bitcoin again quickly, and I think we discussed this on last week's episode. We zoom into the to Bitcoin on a daily. We've talked about this potential head and shoulders. So there's our head, right shoulder, left shoulder. Okay, then we've got our neckline that comes across here. If this pattern, so head and shoulders top, this would be cast as, and if this pattern does break down to the downside, it would take us the target. So this doesn't mean it has to be met. Would be around the 76k area. Now, what is around that 76k area?
Pain and despair. Loads of people saying the bull runs over, crypto's not real, it's a scam. How are you? I hope you sold all your crypto, etc.
Yeah. But it's also, on a technical level, a prior high. So on a technical basis, we want this to come down. I know it sounds horrible, but we want this to come down here to retest it. Because that, you can see, when we broke out in the month of November, we haven't come back since. There's no retest there, even on the weekly.
I don't want
to retest.
I don't want it to come back there. That's my pride.
I think the technicals make it healthier if we revisit.
If it goes back there, I'm looking at AI16Z will probably be like 40 cents, 30 cents, something like that.
Well, do you know, so on my chart of AI16Z, look where I have my other target area. 12 to 17 cents.
It can't go that low. Hyper low.
I would never say never.
Oh, mate. I don't think we have enough time for a lot of those things to play out, which is the problem with silly season.
So we're in the banana zone, but back to this. We can see here that this printing cycle here was a lot shorter than what this one is going to have to be. Okay? Yeah. And that's why I can see this kind of being dragged. Not that I want to be along for the whole of this, because you're going to see, I don't know, 40, 50, maybe 60% of corrections, like fast, like happening in, like if you go out to the monthly on Bitcoin, let's get rid of all this noise. You can see that these monthly candles, or even last bull market, like this mid here, a lot of people have PTSD from this. Like in 1 month, we fell 50%.
Oh, was that the carry trade? Was that when they had that was a Japanese carry trade? Oh no, that's when
that was last cycle.
FTX. So is that FTX time?
No, FTX was in here, I think.
Oh, so this was it just happened.
Yeah, this was just a pullback, I think. This was a business cycle pullback. But then we had this second peak, and it was the first.
Yes, I remember. Yeah, so that happened on the way up, didn't it? So yes, that was on the way up that we had that aggressive drop.
And it was the first time, so I put this on a log chart, it was the first time ever that you'd had like a double top. So, bull run of 2017, you had one peak and you dropped. Then I think I have a chart of the 2013 actually. Yeah, here we go. So 2013, one peak drop. This one here, we kind of had a support.
That was my first bull market, by the way. That's nostalgia.
Crazy.
That's nostalgia.
Your AI16Z is not a bad play. this to get to where we are now. Yeah, it doesn't matter. I mean, this is why people don't hang around in the space for, and why some people just can't stomach it. It is not easy.
It's always with AI16Z. If you go back, there was my first entry was around 40, but before that there was like a 60 or 70% drop. But it was back.
Was it this one here?
No, it's before that. It's before that. So it's down when it's quite small. Is it not on there?
I mean, these are on daily candles.
Yeah, so it might even be like near that first one in the November time.
One here.
Yeah, no, the next one, yeah, that one there. So if you go right close, so in that time when it went down from, so say that first red candle, that second red candle there, when it's gone down from 50 and it's gone all the way down to 13.
No, I think that's 3 cents there. So
it's gone from 5 cents down to 1.
Yeah, so we had one here where we were, that was around 50 cents down to 13, this section here.
Yeah, I think that was it, right? So
yeah, so we had a peak at 53-ish, and it drew down 81%.
Yeah. So if I'd have bought at that 50 and it draws down 81%, I'm feeling like a dog. Like, it's just horrific. But then it rips off to $2.40, and that's what happens. Like, if you know you're gonna win, you kind of have to sit tight.
Yeah, and this is what I say, like, literally. So when I'm talking to new clients now, okay, and they're talking about, oh, do I just get into Bitcoin now? Okay, and I'm like, first of all, I'm going to throw you this chart up, and I'm going to say, where do you think this is going next? And 70% of the time, they will go, well, I think I see this higher over the next 5 to 10 years. Because I'm a long-term investor. I do not touch my Bitcoin. The only thing I do with it is add to it. I don't sell it. I don't fiddle around with it, do anything. Okay, it's purely, that is my pension, right? The way I look at it.
Good pension.
70% of the time, people say it goes higher. So I then say, I zoom in and go, okay, if you buy now, what is the worst case scenario? And before that, I go, right, okay, do you ever see Bitcoin going to zero? And normally they're like, well, only if it ever gets breached, or if this or this happens. And normally they're like severe world-ending events.
Yeah.
Okay, so you don't really care about what's happening with your Bitcoin. So I then say, okay, how far do you see it going down? Okay, and they go, well, last cycle we got 60%, cycle before that we got 70%, so they're getting smaller. Maybe we get 50% drawdown from this cycle. Let's say conservatively it tops at 150, it goes back to 75. Okay, so if you're buying at 92k, obviously you've got to assume you're right first in that scenario. Your downside, with the guy I just explained, said 75k-ish, okay, was where he could see it going. So if you're buying from here around 92 and we draw down to 75, that's around an 18% drop, okay? Your downside is 18%. Your upside? Where is it? You tell me. Because the sky is literally the limit.
Pick a number, because as long as you're printing money, it's going up.
Yeah. And this is why people, they're like, oh yeah, but it's 92, it could drop to 75. And I'm like, okay, if you've got a stable income and you've got spare capital, it doesn't matter, because what do you do in that scenario? You add to your position, you lower your average price. They're like, and it slowly starts to click, and I love watching it happen, because then you'll see their eyes just like light up.
Yeah. You've got to sit through one cycle of pain, or like a relative of mine done, you buy when everyone's saying it's dead. Like, she said to me, what's happened with crypto? Everyone's saying it's dead. I was like, auntie, buy it now. Like, now is when you buy it. When everybody is laughing and saying, ha, ha, ha. Because she came to ask me, like, oh, are you okay? And I was like, I'm fine. Like, they tell you that it crashed. Like, I know what really happened, but this is just the cycle. And she bought, and I think that was 18 maybe, or 19. So she done phenomenally well. Yeah, because it was down then, like 4 or 5 grand or whatever. So it's it's getting to grips with the cycle, understanding
Volatility that I think scares most people.
and right. And I had this conversation yesterday, and what you have to do is just not see it as money. Just see it as a score. It's a score. I want to get to this score before I'm too old to go and get a job. That's the score I want to get. I need that's my score. Because if you think of it as money, then, you know, it can hurt you a little bit. Yeah. When you're down 50% in like about 8 days on some like coin that you think is the next best thing, the money side can hurt you. So I like to just think of it as a score and then try and do the best I can.
Yeah, I mean, so the other thing is, I say to a lot of people is the less you look at it, the better.
Yeah.
If you can just set up automated buys or an automatic bank transfer that goes to your crypto exchange, then you set up a regular buy, and then every month or two, you log in and just move it off.
I'll tell you what I have learned, actually. I'll tell you what I've learned from you. This idea of being super disciplined with your sell. That's what I've learned from you. I've picked that up and I've started to use the...
I've only learned that from last year. And it was the pure reason because I rode it all the way up and didn't take any.
Brought you all the way down. I do. So now I'm in the situation where I buy something. I want to start doing small snippets. So when I buy something, I'm going to do a story on my stories. I'm going to do I've bought something now, or I might do it in the grid. I'll say I've bought this. Obviously, I won't say the amount or whatever, but I'll say I've bought this, and here's why. Maybe like a 1 minute video, and then I'll say I've sold this. This is why, because I'm now buying a lot. Because as soon as I hit 100% up, I'm selling, taking my initial, and I'm going.
Yeah.
And then I've got a list of things I want to buy, and I'm just knocking things off this list. Obviously,
that's the trouble. As we go down, as you go further in the bull market, there's more and more things that you want to buy.
Yeah.
So, I mean, it's really hard for a newbie because most people nowadays, or most kids that I've spoke to, they're coming from the likes of TikTok. So they will see TikTok influencers going, oh, he said about this, this, and this. And I said, right, basically, are you doing this, one, because you want to learn, or are you doing this purely for monetary gains? And if it's monetary gains, then you pick 5 things, you make it automated, and don't look at the damn thing for 10 years.
Yeah, but the problem is, and this is what people say to me is, what do you pick? That's the problem. Now, we have 2 different ways of doing it. So you've got your way, I've got my way, and we speak to each other. So sometimes I'll say something, you'll say, oh, and I'll be like, okay, cool. Maybe I'll buy it at this time, not at $2, or vice versa. I'll say, like, I don't think the fundamentals are that good.
Yeah.
But for me, it's always tokenomics, use case, and game theory. So is it something I think people will get behind? Will people think that's a good idea?
Ultimately, you've got to believe that there's some sucker somewhere else that will buy it off of you a hell of a lot higher than it.
Yes. Yeah, that's the game theory. And that one kind of matters the most. Like, that's meme coins. Like, that's like, will other people like it? If I go and tell the people in China, will they like it? Will they buy it? That's one.
But do you remember that one I sent you? I think it's SAI that you didn't like because it was heavily VC backed. Something like that. SAI? Yeah, probably 3 weeks-ish. So the ticker is SAI.
Yeah, see if you can find it. Let me see. Try and drop my memory. Yeah, drop my memory.
It's on ETH. This one here, Sharp AI. So I don't think you liked this one because it was too heavily VC backed, from what I remember.
Okay. I'm extremely anti-VC this side.
Yes. So, and I understand your reasoning because VCs do not give a shit about anyone and they will literally just dump on you.
Yeah, tokenomics are just bad.
Yes. But are VCs going to be happy to dump at 18 mil? In my eyes, no. Okay? They will probably want to get this to 100, 200, whatever, before unloading. Okay? So if you wanted to buy this, like this is me here. I was in this. I did 150%. I got out again. Okay, I'm waiting for a bit more chart structure, and then I'll probably re-enter again. But I know that I have a risk of VCs dumping on my head. I know that this could be falling 70, 80, 90%. So the money that I'm playing with this, if you're doing this sort of stuff, has to be a very small amount compared to what you'd usually, say, fiddling with. Because at any moment they could just dump on you.
And what I feel like is that's like picking up pennies in front of the steamroller. Yeah. Which is why now, so this cycle, I believe this cycle is truly different to any cycle we've ever had before. Because this is the first cycle where all of the top projects are out the gate deflationary. All of the top projects out the gate, they've got 1 billion tokens out there, and you buy the tokens, price goes up, people sell the tokens, price goes down. There's nobody in shadowy back rooms holding this on this and doing this on that, and people have bought this. Like, no, either you bought it really early and then you can dump on people, or you've not. And that tokenomics that we have now, which I think a lot of people aren't really like praising meme coins for, I think that levels the playing field out massively.
Yes.
And almost on a philosophical basis, I guess, I'm kind of like, and because of that, I'm not buying nothing that you VCs come to sell me, because we don't need to now. There are meme coins, and there are AI 16Z, there's virtuals. Every single AI agent that comes out now, all of the tokens are out. There is no circulating supply and fully diluted valuation. Like, there's just a one number. So for me, I'm happier avoiding the VCs.
Yeah, the VCs.
Yeah.
It's just less stress, isn't it? Yeah, something you ain't got to worry about, and it's fine.
So
we've done quite a broad look on things today, which I quite like. Makes a change. Let's quickly just cover what you think, and I'll just do two each. The most undervalued AI agents at the moment.
I've got right now an actual portfolio, because I'd done made one for my pal yesterday. I said, all right, we sat down. I'd had a few drinks by this point.
So not financial advice.
Not financial advice. No, not for everybody else, but for him, he better do as I say. So we've got these. The target is that we quadruple his money between now and the end of the year. He says, if I get back 4 times what I put in, I'm happy.
So you're kind of doing what I'm now doing with my new 2025 portfolio challenge.
Yes. Yeah. And doing X during silly season, peace.
Should be easy. Should be easy.
Yeah, peace. But I've said to him, like, he said 4X, and I've been like, I've played it cool. I've been like, yeah, I think we might. But he jumped up and down. So I've got.
Does he know 20X is around the corner?
I'm not going to tell him that. Just let's let it happen. And then when it happens, like, obviously I'll be his best friend. All right. So the reason why I made this portfolio was because it's user-friendly for beginners. So anybody who's watching, they've made it to like 50 minutes into the show. Well done, because now you're getting the alpha that's nice and easy for you to understand. So you buy your Bitcoin, because this is where people get stuck. You buy your Bitcoin, you get your little ledger or whatever to hold your Bitcoin. You spend, let's say you put £1,000 in, and these are the two things that you do. You move your Bitcoin to Ethereum on Base, and you move the other half to Solana. So we're going to have a portfolio which is 6 assets, 3 on Solana and 3 on Base.
Can I guess them?
You can.
I want to take a guess.
Let's start with the Solana 3. You'll get one of them.
A 16Z's got to be in there.
That's the top one, straight away.
Okay, so that is going to be your Bitcoin of the portfolio. I then reckon, let me have a look quickly.
I'll give you a clue. So each side, the Solana side and the Base side, I've got one infrastructure, I've got one meme coin, and I've got one AI play on each one. And I've mentioned all of them before on this show.
So virtuals, I think, will be on base.
Yep, that was easy. You 2 for 2 so far.
Have you then got infrastructure base?
No, infrastructure on base is virtuals. So I've got a meme on base and a AI agent on base.
Is it Miggles?
Oh.
Ah.
Yeah, it was between one of two. So it's not Miggles, so you'll get it now.
Is it Ski Mask Dog? Brett, big Brett.
No, it's not Brett.
Really?
No. What is the strongest meme this year?
SPX.
Yeah, there you go. You got that one right.
Right, okay. Yeah. Then I mean, I would say have you got game on base?
No. 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 Game could have been the third one. The third one is, so I also wanted to have 3 tiers of risk. So we've got the multi-billion-dollar guys, which are AI16Z and virtuals. Yeah. And we've got the multi-100 million guys, which is one which you haven't got yet on Solana. I don't think you'll get that one.
See, bro?
No. That's
Griffin.
Nope.
I'm just listing everything on my screen over here.
Okay, so I'll give it away because the little one you won't get. So the high one is virtuals, the middle one is SPX, the cheap one, high risk, high reward, is Polytrader.
Yeah. Yeah, you said that before. I've tracked that.
So on the Solana side, the big dog is AI16Z. The second one is one called MLG. 360 no scope, 420 blaze it. Have you seen that one?
No.
That one.
360 no scope, 420 blaze it.
That one has got me in a tizzy. So I'm all over that. All over that one.
How new is this?
It's months old.
New?
No, it's not new.
Christ, it was out in April.
Yeah, but look at
scream to all-time highs.
Have a look at the chart.
I'll throw it up now.
You are going to love it. Look at this chart.
At that.
Look at that bad boy.
That is what you call a cracking chart. So for most people, if you come on Dex Screen and you'll see this, right? What you want to do, and it looks like, oh, it's just done this and it's flatlined. If you actually zoom in, there is bumps here. But what you want to do, so again, a bit of education here. In the bottom right-hand corner, you want to click L. That changes it to what they call a logarithmic chart. So when you have stuff that expands really high and really fast, you need to stick it on a log chart to see everything better from a broader view. This is how you want to be looking at risk assets with a log chart. But yeah, that is beautiful. That is stunning.
So the reason why I got into this, it was a tip. I got a tip off of a guy. The reason why I got into this was because there's an esports team called FaZe Clan. And have you heard of them? Yeah. Like, so they're pretty big, right? They're like the Chelsea of esports. So they're not the biggest, but they're up there. And their top guy is a guy called FaZe. And he
thanks.
Yes. Oh, that's the guy. So he's recently gone and got in on this MLG. They were in their Discord chatting and they were like, oh yeah, we're really getting some momentum now. FaZe is going to get a tattoo and he doesn't pump anything. He said the last thing that he pumped was MOG. He hasn't shilled anything since MOG. And that was ballistic. So this guy's allegedly got the Midas touch. 3 million followers on Twitter. He's decided to go and get a tattoo of this 360 no scope, blaze it, 420 flame it or whatever. And they're in their Discord chatting and they're like, oh, we should get Murad in here. And we all know Murad is like meme coin Jesus. And then Murad replies and said, I'm already here. And everybody's like, ooh.
So this is maybe one of the new memes to be having.
This one, I'm all over this one. It's going to 1 billion.
I would only be touching this on a big pullback.
Yeah.
But the only reason you get a big pullback on this at the minute is if you get some sort of big news event. That's not related to, obviously, MLG, but broader, macro, whatever it is.
I guess with these ones, you generally get a 60-70% pullback just because, don't you? Sometimes you just do. It just,
I mean, from the peak, we've already had 45%. It doesn't look like that on the thing I'm looking at now, but you've had 45%. From here, it peaked out at what, like just shy of 19 cents? We're now down to 10, 44%.
it'll be back at 18 by.
Yeah, I would be looking, I mean, I think these wicks get filled. I would be, if I'm ready to take a position in this, I'll be looking for this.
You're going to take a position.
I would want to see
There's no way you escape this one.
80 odd % drawdown. I mean, I'm going to add it to my watch list.
Yeah.
Right.
It's the name, it's the story, the lore. It's a good one. So I put that in my pals list. And the final one, which is the last long shot of Solana, is FXM.
Yeah. I was going to say FXM.
Yeah.
That is this one here.
Which is coming close to that buy-in zone again.
Yeah, tapped it. Or near tapped it.
Yeah.
I think that gets filled. We might see a bit of a relief rally, which is what we've seen now. Because, I mean, effectively, if I take a 4-hour chart here, I could fire a line across there. And that, where we are now, could be classed as a bearish retest. So we now should see price action come back down again.
Yeah.
As you can see, this 4-hour candle here, sellers all over it. We've tried to get above, immediately got rejected. We should see that float into here now.
So for me, I think there's also the fundamental side, which I think really matters, in that if they do release a product, because that's a chart, that's vaporware at the moment. It's not at mainnet. It's at testnet. When they do go to move to mainnet, I think it suddenly becomes something that AI agents use. If enough of them use it and start selling themselves on there, then I think FXN goes bananas. So if we touch 30 again and I see it, I'll buy again because of the way it's going up and down.
What was the other one on base? Polytrader, Virtuals, and
SPX.
Oh, SPX. Was that even on base?
Yeah. It's on
I
base.
thought that was Sol.
It's on base and Sol and ETH.
Oh, okay. Where did it originate?
I think it originated on ETH.
Oh, okay.
I think.
Oh, fair enough.
That's where the most of the liquidity is. So that's my portfolio for Jan. We should do this every month, actually. Have like
a new portfolio.
Yeah, it's my portfolio.
Well, that's what I've done. So that portfolio challenge of mine, that includes.
So what's in it?
AI16Z.
Yep.
ARC, so ARC, so like I said, framework stuff. Game. So I look at Game as a leverage play on virtuals.
Game's a massive buy now.
Yeah, Game. Yeah. I would have put virtuals in, but the whole goal of this portfolio is to, like you said, kind of 4x, because the last portfolio I did overall did 360%, and my goal is to beat that. So I need about a 4x.
Yeah, but that was last year.
Yes.
Yeah, but this year's silly season, so you've got to do 10 times what you did last year.
God knows what will happen, because if you're playing around with these smaller things,
yeah.
Who knows? But yeah, so I've got AI16Z, ARC, so ARC is the ticker, Game, Cookie, Whiff, and the Miggles.
Whiff is dangerous.
Whiff has been, again, these big memes, I'll share my screen.
Yeah, holding up, is it?
They've been hammered. No, they haven't held up. But this, you knew this is going to happen in memes.
But we said it though, didn't we? Phil.
I mean, look at Whiff. That's the monthly. Okay, we are literally battling with the lows that we put in August in that 7-month drawdown. So from peak, Whiff is down 70%.
I bought during those August lows. Yeah, I bought around there and I rode back up to 220.
Because I think we'll probably. Oh, I've already marked it out. I think we do come down to this lower boundary again, and this green line here, I think we may get a sweep to there. Or that tiny.
$100?
It wouldn't surprise me. I mean, the one that has held up most, or the couple that have, Pepe, I think has been really strong.
SPX.
Well, I mean, bigger market cap ones here.
Yeah.
Doge, Pepe, they've held up pretty well. SHIB hasn't been too bad. I mean, Bonk isn't awful, but it's had a much deeper drawdown.
That looked
bad either, to be honest.
Yeah, Brett's bad. That's 50%, is it? Is that 19? It's gone down from was 13. How much is the drawdown on Brett? That looks worse than it is, I guess. 50%. Oh, I can't hear you. You've muted yourself, I think. Yeah, you've got no sound. I'm talking to myself. We've lost the financial navigator. We can see him, but we can't hear him. Oh, he's gone completely. Oh, hold on. Right, let's see.
You got me?
Yeah. Got you now.
Yeah, my microphone died.
Okay.
Apologies. But yeah, Brett is 52% down, which I think is pretty average for these.
Yeah.
I think if your meme coin's down only 50%, I'll tell you, look at this one. So the absolute runner that was in 2024 Turbo, again, is still holding strong. I mean, the only thing that worries me with these is they do look a bit iffy on bigger time frames.
The thing is, I like to think that during drawdowns, like when Bitcoin's going down, the projects that hold are the ones that race away when Bitcoin starts to go back up again. So that's why I really like SPX, even though I bloody sold it. As soon as I sold it, it doubled. But that's why I really like SPX, because everything else is going down. All the other memes are getting battered. And we said memes are going to get battered.
They're going to get slaughtered.
And they did, but some of them didn't. And the ones that didn't, like this MLG, has done that run while the other memes are getting battered. SPX has held itself. Pepe, as we said, held itself. Turbo's done really well. I think that those ones that have held, when Bitcoin decides to stop.
It's the same with the other cryptos as well. You look at the likes of SUI. That has been probably hands down the strongest asset. Along with Bitcoin this cycle.
Yeah.
The strongest one by a country mile. Am I kicking myself for not buying more? Yes, but I'm also looking for better entries, but it never gives me one because it's literally just keeps going.
Yeah.
So
Sui's been a tough one because I felt like, are we really going to do L1s again this time round? And we did, but only Sui. I don't think we get any more. I think Sui's the only one we get. Should we do our predictions?
Yeah.
This has got to be way.
We had, for reference, so first of all, I will throw up the chart. Screen. There we go. We had Bitcoin as always. So let's throw up a Bitcoin chart. We are on the weekly, which is what we want. Now,
you were bearish, I was bullish.
I had 104, you had 110. So we were both well off. Last week we went to a high of 102.7, so I was $1,300 off. And we're quite a way off of yours. And we reached a low of 91,250. So not a million miles, but
mine are going to be horrific this week because the whole direction of Bitcoin was wrong. So everything is out.
As we go down the list, do you want to do our new predictions now, or does it after?
No, we'll do them as we do our old ones. We'll do our new one.
Okay. So Bitcoin, a new prediction for next week. Looking at the daily, we've had a nice reaction. I think we could see a bounce. I'm going to say we could see 97.
I feel like every time I'm bullish, we get a bad week. And every time I'm bearish, we get a good
We get a good week. That's basically the charts telling you, Carl, that you're at support, that we should see about.
Is that how it works, is it?
Yeah.
All right, do you know what I'm gonna do? I'm gonna go with what you're saying.
You got 97 as well, yeah.
No, 101.
Oh, I like it.
I think Trump comes back in and we have a massive run as soon as he sits down on the
When does he come in?
Monday.
Right.
Next Monday, the 20th.
Well, ETH Shatterbrick. Look at ETH. Right, so last week I had 3,950 and CryptoSI had a target of 3,800. Last week ETH went to a high of 3,746 and a low of 3,157. So again, we were both off on that slightly.
Oh, I wasn't that far off. Who went to 3,750? It's quite close.
Not a million miles away. $50, you'd have that one.
I'll take that one. But ETH also, this cycle, before we started this cycle, ETH was my most bullish bet out of everything to sit in.
Something that's just interesting that I've just spotted. We have had a head and shoulder breakdown on ETH. That was your breakdown. If that is to play out, we should see ETH. Look at that. Magic. It's going to hit the trend line. So the target puts us here. And that trend line goes back to bear market of 2022.
So where's that, 2.6?
That is around 2.6, yeah. So where do you think we'll be Monday next week? I think we're going to be back up at around, I'm going to say 3,180.
You think we're going to bounce off the...
And we could bounce. I think we could bounce here and we see a bearish retest. I think we could bounce from here, come up to here, get them knocked back down, then we come for this flush. I don't think Trump coming in is going to save us short term. It won't be till... I mean, these are daily candles, bear in mind, so you probably want to go out a bit further, but I wouldn't have thought we see a bottom till Feb-ish.
I think ETH's weak. I think it's really weak. I think the people who are holding ETH really just want to sell it. And I don't think anyone's coming to buy it.
No, I am buying. Sell me your ETH. If anyone wants to sell their ETH to me, let me know, please.
Oh, okay. What should I say? I'm going to say 2.8.
2.8. Okay, perfect. Right, AI16Z. You've pretty much nailed this. I went mega bullish at $2.75. And you went mega bearish at 50 cents.
Did I?
Yeah. So if we then go to here, AI16Z, we're at $1. So you were directionally right.
Yeah.
Yeah, look at that. So we went to a peak of $2.36. What did I say? 56, 50. I think it was, wasn't it?
$2.36. I was feeling really smart with my $2 entry.
That's 75, I said. So it went to a high of $2.36. Not a million miles away, but Kyle was directionally right.
Yeah, and then we just, now it's in the toilet.
Yeah, in the toilet. So do we want to keep this one up? I reckon we do this for another week.
Okay.
one of the bigger ones in the Asian space. I think it's a solid one to do. Where do you think we're going to go?
I think we're going to go down and test that bottom range up there. Is that 80 cents?
Yes.
Yeah, I think that previous highs, yeah. And you know what? That is where I sold when I bought my first round.
Yeah, it's around 80 cents. I am going to say we bounce, and I'm going to look for 120.
I bet we hit both of those.
Probably.
I bet we hit both of those because there's enough volatility for us to easily get 20% in each direction.
Right. Next one, I need to change screens quickly and go to deck screener.
Right. So what did I say on that one? I said 80 cents, didn't I?
Yeah, 80 cents. And so we had ARC. Oh my God. If that doesn't matter, that we're in a party. Right. I'll explain in a second. I said 0.47. CryptoSI, you said 0.50. Where are we? 0.23. As of current, and last week went to a high of 0.45 and a low of 0.22. So we were both correct.
Yeah, we were like, it touched where I thought it would touch, but then obviously.
I'll tell you what though, if this daily candle can get back up here, that is giga bullish sign.
Where does it actually go to?
If this daily candle can close back above, say, around 26 cents, giga bullish. I reckon you could then see it back at 0.35. We can get back above this white line in here. I think we could see a nice bounce, like really nice bounce.
On fundamentals, that particular project, they've started doing testing, and they're including community members. They're doing some kind of game theory testing with their AI. Well, people are very excited about it. So
maybe that's why we've seen a bounce.
Yeah, we should be expecting some more good news. We're still waiting for somebody to make a really good AI agent with this framework.
So do we want to swap this one out for anything, or do you want to stick with it again?
Should we swap it for a meme?
Yeah?
Yeah, let's do a meme.
Let's go with, let me just have a quick look at the memes. I need to share my entire screen rather than just sharing one, because then you can all see what I'm doing. There we go. So memes, I'm gonna go with the daddy of them all. That's Doge.
Yeah,
because it is my biggest bag by quite a way. But actually, maybe not now in this drawdown. I don't actually know. I haven't really looked.
That's the best thing to do when we're having drawdowns.
Don't look and just buy.
Don't look. Yeah, don't look. Keep buying.
I reckon. Oh, Doge. It's been relatively strong. I think we'll just see more chops. So it's going to be quite conservative. I'm going to say 0.36.
Okay, I'm going to say
Where do you reckon we'll go?
0.42.
Oh, nice. I'd be happy to see that back up there. Do you know what that would be if that did that as well? So you could, yeah, you could have an argument for an inverse head and shoulders. Because if that is to come back up there, and we then do a bit of chopping, again, something like that, we can then create our shoulder.
and then off we go up to the moon.
Yeah. Then $1 inbound.
That makes sense.
That actually would work really well. That would work really well. 42 cents, yeah?
Yeah.
Perfect. Right. And then game last week, I said 30 cents. You said 0.35. And game is currently sat at 13. But on the weekly, we did hit a high of 0.24 and a low of 0.18. So we were both incorrect. Well, you got 0.3. Yeah, we were both well out.
Was well off, but game now at this price has to be on my buy list. I now have to buy it.
Yeah, it's what I call the bid box. The green boxes are what I call bid boxes. This is where you start bidding.
Yeah. Yeah.
So, not financial advice. And you can already see we've seen a nice reaction here.
Yeah, because as soon as it goes in there, we're not the only ones looking at it. Other people are seeing it and they're like, oh,
people have got orders, they've got all sorts ready. I mean, you've probably, if you spent a bit of time and you looked through all of these, you'd probably see some big orders go through. I mean, there's one there of $24,000 in a single purchase. So, yeah, another 17. Now it's 21. Yeah. So it'll be within this region. There's some big boys picking it out. Right. Do you want to swap this out or keep it the same? You want to take a meme?
Let's. I don't mind keeping this one actually.
Yeah, keep game.
Yeah, I think we should keep game because I think the price movement with it being so aggressive, I think it's a story here.
Game renaissance.
It has to bounce, right?
I would be thinking of maybe a retest of around this red box. So maybe a bearish retest of this line. Yeah, the white one. So I'd say around maybe like 0.17, I'm going to say.
See, I'm going to go so far as to say not only do we test it, but I reckon we break back through it. Yeah, because look how quickly we've come out of that bid box.
Yeah, that'd be very good. If we were to close this week back in, I mean, the weekly candle, the chart doesn't look as great. There's not much history on it, but
too short, isn't it?
Yeah, it would. That'd be a good sign. And then we could go all the way up to this diagonal resistance up here, so 50 odd cents. And that would be one hell of a move from where we are now. It's about 4x.
Got to buy game. It's the AI machine of base. It's the other one. It's
the virtual's brother.
Yeah.
It's the virtual's younger brother. Where are you going?
2. 0.2.
20 cents. All right, lovely. So to recap. So I'm doing 1.7 and you're doing 20 cents. So these are our predictions for next week. You can see them all on the screen there.
Right, hold on. BTC, you're 97. I'm 101. You're 3180. I'm 2800. You can tell I'm upset with Ethereum. Yeah, or some $1.20. I'm 80 cents. You can tell I'm upset with AI16Z. You're 42. I'm 42.
I'm 46. You're 42. And then game, I'm 17. You're 20.
20. All right, so that's BTC, ETH, AI 16. What was the last two? Doge and game. Yeah, I think the moral of the story today probably is
shut your eyes, buy.
Add game to your buy list, I would say. Moral of the story today is
Do you have a longer term perspective? You have a longer term investing time horizon. Find your assets, pick them, have conviction. Once you get your money made to 100%, get your initial out, and then you are playing with house money.
yeah, and then go and find something else to lose on. This week's winners for me were Thales, which was one of the AI agents that I found at the last demo day.
Oh, okay.
And I think my FOMO Radio hit as well this week.
Okay.
Which was another AI agent.
I saw that Spore has absolutely fallen apart.
Yeah, they're really struggling.
Yeah.
Hit and miss, and it looks like they've missed. So
it's a difficult market.
That one, as it's gone down, I want to put more in because if he recovers it, if he finds a way, which I don't think he's going to quit, then they find a way to do it. But the other options of things that I had to buy this week were like, it was between that, put more money into that, but I decided to buy Soleng, which is a code writing AI bot by a woman who is a developer at, what's it called? I can't remember the name of it now, but one of the big AI
firms. Is it OpenAI or something?
It's one of them. It's not Anthropic.
Anthropic. Oh, yeah.
Anthropic. And I think Anthropic are the company that released Claude.
Yeah, they are.
Yeah. So
I always normally say the AI's names rather than the people.
The people, yeah. Yeah. So she's a dev at Anthropic and it's her project and I think it's integrated already into GitHub. So the plan is I'm gonna use it with a project that we're working on at the moment and see how well it actually works. But I thought I'd buy it first. And that's down about 30%, 40% now.
So what's that? Basically like a ChatGPT sort of thing?
Yeah, there's a few of them.
Okay.
I like this one because it's already integrated into GitHub and she seems to be very competent development-wise, but not so competent as crypto-wise.
Another great episode. I think a solid one. We took a great step back, saw things from a bigger world view. And then obviously, if you manage to stay to the end, you receive some top alpha. Yes, what we're looking at in these markets. Obviously, nothing is financial advice that we've mentioned today. We're merely two idiots online just trying to make a bit of money, trying to get by.
The interesting part, I think, is our energy during this drawdown, which
a lot optimistic.
Yeah, where a lot of people are like, oh my God, no. And I think this might be one of our last chances to really position ourselves for sing season. So
there's not going to be many more buying opportunities.
No. So deploy that capital and
the biggest thing is just having a plan. Just have a plan. My plan is to deploy my capital out those bid boxes that you guys have seen today on various charts. If my assets come into those areas, I buy. It's literally as simple as that. You can't get any more simpler than having the price.
You tend to make all of your money on your buy-in. You make your money buy. You have the good engine.
It's only because we're at the start of this bull market. If we were coming out of a bear market, or we were in a bear market, I'd be buying every month regardless of where the price is, or every week. I wouldn't give a damn where it was. All I know is that we're 70% down from the highs and I'm betting an absolute bargain of whatever I'm buying.
Whatever you're buying, yeah. Providing it stays alive.
Yes. Yeah. Anyway, been a pleasure. I look forward to next week's and hopefully we can have this setup work again.
Yeah.
I think it's worked pretty well.
I think it has. What we do need to do next week is if you have got a MAGA hat or anything like that to celebrate Trump's inauguration, we should...
I'll see if I can pick one up.
All right then, mate.
I'll order one in for the special occasions.
Yeah, there you go. We'll celebrate with our cousins from across the pond on their new arrival and hopefully we get another Trump pump to take us into February.
Let's see.
I need one.
Right. Take care, everyone. Been a pleasure. Speak to you all soon.